Markets are at all-time highs, but should we be getting concerned as investors and traders during one of the fastest rallies we've ever seen? Well, one thing's for sure, the bonds market is starting to show those signs. And as many of you will remember, this was the lead indicator that we started to use in February and March to show that things were potentially starting to break. In today's video, we talk about that along with what's happening in the crypto markets. We've suspected that maybe these are going to heat up, and it looks like some big breakouts just occurred in both Bitcoin and Ethereum. A lot to discuss, guys. Don't go anywhere. Let's get into it right now as we cover stocks, commodities, and cryptos for the days ahead. See you soon. Well, welcome back everyone to The Daily Show. My name's Tom, and in today's video, we really need to talk about leverage and debt because it is starting to move up and it does cause some signs for concern when you're talking about the bonds market. Also, what's been happening? Well, it's been more around big tech, and could this be the final push? In the next couple of videos, I suspect that we'll see a few big dark pools, and of course, we'll be updating you to that. So if you're interested in finding out more about what Wall Street's been up to and what they might be doing next, make sure to subscribe because we've got some big updates coming into this earnings season. Let's talk about investor credit. Now, it hasn't been a secret for a long time that everybody is borrowing, but that's starting to accelerate once again, and we're starting to see the largest, well, of course, the record largest amount of leverage in all sectors, whether it's single stock ETFs, which are people are buying on leverage, or whether it's just money in bank accounts or money in trading accounts that is being borrowed against. That has all risen to really ridiculous levels. The last time we even saw something like this was, of course, the dot-com bubble, and you'll see that this one is a lot larger. What could be in store in the future? Well, it's going to be an unwind like no other at some point, but of course, timing will be everything. Let's talk about retail purchases. We mentioned this in our last video, which was that single stock leverage is up big time across the board. And this is again showing us that we have been seeing a trend towards hypergrowth and massively just growth companies being levered against using ETFs. Everyone thinks an ETF is safe until you actually understand what a leveraged ETF is. So if you don't, make sure to do a quick chat GPT on that and understand what the actual ETF is doing and how you could lose a lot of money if you're not aware of the gaps and discrepancies that they cause. Now, why is this all important? Well, each leveraged period has to be higher than the others. And we've just started to tick over now to FINRA margin statistics showing an all-time high coming for leverage across the markets. And remember, nowadays, it's not just one place. It's in the crypto markets, it's in ETFs, it's in FINRA margin stats, it's in so many other areas that we have to be paying attention to this because like all great bubbles, they all start with debt and usually end with debt. And in this case, yeah, there are some warning signs that are going to be coming through over the next 6 and 12 months, at least in my opinion. But for now, what really has been driving this market? A mixture of really bullish retail traders and of course, also a mixture of a lot of fund managers losing out and being behind this current rally. And it has, as you can see here by this cool chart from Daily Chartbook, a noticeable level here in terms of sentiment surveys. We've gone from everyone being super bearish to everybody being super neutral. And this is taking us back up to the potential now that we could be leading into FOMO. So I ask you guys in the comments down below, are you starting to see FOMO across the board? Or have we not quite seen those levels that we often do reach, where everyone's just piling in because they can't believe it's gone so high and they start to think it's going even more? If you're asking me about something like Hood or PLTR, I'd say they definitely have experienced FOMO. But if you're looking at some of these semiconductors, yeah, they're doing well, but we've got to remember they were on sideways for quite a period of time. So who's selling? Well, it looks like institutions have ramped it up again. And while I don't pay too much attention to institutions, they are basically selling at faster rates. 4-week average, you can see here is not too much. Then last week, they went ballistic with selling. Now, you could say that's got to do with, maybe just taking profits off the table after the quarter or something. Who knows? But certainly a massive institutional sell as the markets kind of dwindled their way up or slowly moved up over the last week. It's something that we have to be paying attention to as we hit the key trend line in terms of technicals. I thought I'd just also add this one in for today before we go through the general period of July, because we're approaching the 15th, which, as you guys know, can be a turn point. and that is that everyone's paying a lot for healthcare. Have a look here at the American household and how much health has gone up in terms of insurances and just costs on health over the last kind of 50, 60, 70 years. And also how much food is in comparison and housing is in comparison. So healthcare has now overtaken housing as being more expensive to look after yourself. And I think that is a shocking statistic, but it probably comes no surprise when we take a look at healthcare being the nation's #1 top employer over the last decade plus, and it's just going to rise from here. So why is that interesting? Why is that important? Well, clearly, I always say do what they do, not what they say. And if you look at any of those rich guys right now, especially the rich entrepreneurs, a lot of them seem to be eating whole foods. Is there something in the food? Yeah, probably. S&P 500 relative performance, tech going up. Yep, that's good. Tech going up is always a great sign. And if you haven't followed markets for a long time, when you see a rally, you want to see tech coming back and tech strengthening. If tech is going back and strengthening, that's a great time. Remember the stat, 83% of the time, tech will outperform the rest of the market. And that's because innovation drives growth. And what we're currently seeing is AI being speculated on heavily to add GDP percentages to the US economy. Speaking of that, all of the big guys have started to upgrade their path of where they think the S&P is going to be by the end of the year. So at this stage, they think it's going to be around 6,600, but some people have 7,000, 7,500 and other things. And one of the big reasons for this has to do with the US dollar, which has been weakening recently. And therefore, for overseas investors, which is a huge amount of traders out there, everyone wants to be part of the US markets, they're potentially getting the ability to buy markets cheaper than you might think, because even though we're at all-time highs, the US dollar is weakening, and that's allowing people to get into the US markets a little bit cheaper than they could a while ago. Christmas in July, NASDAQ is usually up at this point, and it tends to do well for the first kind of 12 days, and then it can go into a sideways kind of period. And a lot of this has to do with earnings season kickoff. So remember, that starts at the end of this week, technically, if we look at it, but valuations will come into play. And it's not so much that we're looking here at things like the aircraft companies. It's going to be the big stocks such as the banks that kick us off. So what are the banks doing? JP Morgan is announcing on the 15th of July, CPI coming out that day as well. That's going to be, I think, a trigger point, which we've discussed. And if we hit the trend line, which we'll look at in the S&P in just a moment, then that could all be part of what's kind of going on under the surface here. Do remember in year threes, we expect up, down, and all around. And so far, this has been pretty much what's happened. We've now rallied to a new high, but we do expect a secondary pullback at some point. And maybe it's worth having some powder dry for that. Remember, yes, the market generally is going to be bullish, but this is what's occurred in previous cycles. And it's always worthwhile at least paying some attention to this if you're out there and checking it out. And as we mentioned, the US dollar is overall positioned very weakly. So at this point, everyone's been selling dollars, but we're at that point where we kind of start to see maybe the possibility that the dollar will stabilize here. Crypto weekly asset flows. As we had in our weekend video, we discussed the idea that we thought crypto was going to move this week, probably in the bull side. And there were a few reasons why that was. I'm just going to read a couple of them here. We had a textbook base at all-time highs. So far, that looks very good for Bitcoin and for Ethereum. We saw US dollar obviously stabilizing and continuing to be weak. But the real world here is stablecoins and tokenization. Basically, everyone's going into this market. Big banks are in there, deregulation's coming, and volume is starting to dry up. So could it be time for every crypto bro to be happy? Yeah, potentially, especially with the rise of MSTR-style businesses. I think at last count, there was like 130 of them, and they're all buying Bitcoin. And yeah, I mean, it's become 3% of the entire market of Bitcoin. They're holding that much. So yeah, there's something going on, and it could be bad in the future. But for now, of course, people are stacking. When we take a look at the movement forward, we expected tariffs this week, but no one seems to care about them. At least the market thinks they're all going to be taken away. So that's not a worry for now, but it could be if it sits for too long. And of course, we've got here US CPI and the kickoff of earnings season. So make sure to sub for that, because we've got some big stuff coming when those things are announced. Now, another quick thing I just want to mention, I have been posting a little bit over LinkedIn this year. Make sure to follow in the pinned comment down below if you're interested. I kind of sharing a little bit about how to figure out strong bull markets, things to look for in 2025. I've got a whole bunch of posts on human psychology and how it helps you to become a better trader and investor. So if you're interested in that, check out the links in the description down below and give it a follow, as I will be posting more over there for that type of stuff. I think it's an awesome platform to do it on, and why not? It's totally free, so you might as well check it out. Let's now move over to the S&P 500. Rallies, but still very close to that key trend line level. And the reason I keep banging on about this is because this level makes a lot of sense, and it also makes some sense from the FOMO and from the hype that we've been seeing in the markets. We've also got more problems than we did only a week ago. So there are things starting to arise here that are concerning. And this means that basically when we're looking at the US 500, we've got a kind of rallying market that's for sure squeezing, but it has been squeezing for quite some time. And eventually those bears are going to wear out. They're going to get liquidated. And generally speaking, too many people will buy into the market, generally speaking, in, of course, calls. And that's exactly what we're seeing here when we're looking at the net GEX. Effectively, when we're taking a look at the options levels, there are just calls everywhere on 6,300. And while that can create like a lot of bullish intention, of course, through positive gamma, 6,300 and 6,320 continue to be this really huge level that everyone's betting on big time. And you'll notice that when you start going out to the big OPEX expirations moving forward, people are even pushing 6,500 calls now. So look, are people bullish? Absolutely. Are these big numbers? Yes. And are there more calls than puts? Yes, there are. But one thing that this week has kind of proven is as soon as this market drops even a little bit, we're starting to see people stack puts straight away. So the put-call ratio is getting really wild, and you'll see that when we bring it up in a chart in just a moment. Tesla, same thing as usual, 280, 300 support in terms of puts. You can see people are starting to stack all of those put levels as people try to go bearish on it. But we haven't seen too much movement in the stock, even though Elon and Trump are still kind of tweeting and doing all sorts of things. We'll see how that plays out. But it's speculative, it's a little bit risky. But of course, that 280, 300 still is a support. When it comes to NVIDIA, it's in positive gamma. And we got another up day. We're pushing 165 soon. We get through 165. A lot of you guys asked, where do I think it could go? 175, 180 was one of my targets for a while. So certainly still becomes an area that I'm looking at. Some other things that have been happening, guys, bonds markets. So you guys know I look at yield spread between options and bonds. And I'm always paying a lot of attention to this because it does tend to show us a spike of fear before the markets usually roll over. And what we tend to look for is we tend to look for this spiking and big dark pool transactions. So make sure to sub for that, because one of the things here is I haven't found those dark pools yet, but when they come, it can be a bit of a warning sign. And although that doesn't mean you sell everything and run away, of course that would be stupid. Generally speaking, it could mean maybe a bit of powder dry could be good. And this is the first uptick of any significance we've seen really since the 13th of May. And that, of course, was a sideways market where we did see some consolidation. So something to watch. We also see here on the put-call ratio, which is PCC in your TradingView platform, you can actually see here we've got this huge spike in the amount of puts that came in over the last 24 hours. So clearly people are still prepared to instantly go on the put side, but we generally are seeing more calls than puts coming through. So just be warned, it takes a little while. Generally speaking, there's always a rug pull that eventually occurs, but we're going to look for those dark pulls and that big bonds market activity. When it comes to US dollar, you guys know that I've been kind of bullish the last 3 or 4 sessions on the dollar, and so far so good. It's been moving up a little bit. The main reason is because it hit that key technical sell. And if people don't believe in technical analysis, why did it hit 96, which is one of the key levels, and then rally off it straight away? Remember, this is heavily oversold, and at the moment, what it's doing is it's struggling with that daily 20. So you'll notice here we have 2 rejections. This is looking bearish on the daily, but if we manage to break through 97.50, that's going to start squeezing people against the dollar and could push a 98.50 fairly quickly. So probably going to be a couple of currency trades coming up soon if we get the right movements. Gold, same, really, no real changes. It did find the rally where it needed to, but hasn't broken this high area. So that needs to happen to get gold back on. And I think it's just, chilling for its next big move. And so is silver. Not good to see silver come back down, but no key breakouts to really say, oh, silver's super weak or silver's not neutral bullish. So I'd still be with bullish side for silver, although there's no new kind of momentum runs. And the same thing goes for oil. It's really struggling here. Oil is rallying, but it's quite weak considering what's doing on the indicators. And just remember, this is a geopolitical play, so be careful on that. Tesla, more of the same, guys, 280-300. It's probably going to wait for earnings. We know that earnings is coming up soon. That's going to be a doozy. So I would say that Tesla may consolidate into that earnings, and it'll be worthwhile watching. And of course, semiconductors broke to a new high. So look, you can't say this market is done now, because why would it be done if semiconductors continue to rally? It's when we see something worrying happening in semis that you want to be concerned, because that shows rotation, that shows pullback, that shows, things like weekly 20 moving average mean reversion. It hasn't happened yet, but the bonds did spike up. And another thing that happened is we started to see more rotation. Take a look here. The Russell 2000 started to rally against the SPY. So that's basically telling us, and I've got it here, that the Russell 2K was strengthening more. And remember, we talked about this idea of correlation. Supply on the left-hand side, trend line on the NASDAQ, trend line on the S&P. We hit all of them at the same period. We see the dollar start to break up. We see bonds start to struggle. It could be a period of time like we kind of expect that could happen in Q3, where we get that kind of pullback that tends to be seasonal around this period. Remember, July, it's called Christmas in July for a reason in the markets, and that has happened so far. Quick update on to Chinese markets. Nothing really occurring here. Still in an upward trend overall, but no real breakouts or flow. Where the flow has been is the crypto markets, and I've got to say, I'm not too sad about this one. I had a feeling these would rally relatively hard this week. We did, of course, update you guys on that. Hopefully that was helpful, and hopefully you're not offside, at least in terms of some type of sell. But in this case, this is a fairly significant breakout in Ethereum. We're seeing kind of the same setups across so many coins. So if we have a look at Solana here, for example, the possibility of a Solana breakup is there. The big thing, though, for Ethereum and Bitcoin is that they have that narrative and storyline behind them. So everyone's talking about banks, tokenization, this and that. Obviously, Tom Lee's big on ETH right now. And whether you like it or not, these types of things do end up creating kind of a flurry. And I saw that for the first time in a long time, Ethereum was actually trending back on X, and people have really been talking about it. So do we look at this as a positive? Yes, of course, Bitcoin is breaking to the upside. It hasn't made that all-time high, or if it has, it's only smidgenly done so, but it does look pretty solid on the charts. So deregulation, as we've mentioned, a volume drying up across the board due to all these MRN, these massive clones of course, the MSTR. And really, it's just all about that kind of textbook up cycle at this stage. People are buying. And it's not just retail, it's mostly big funds. They're trying to get into it any way they can. And that's because they're pricing in some kind of future. I would say Bitcoin is going to be really wild. I think there's going to be huge rallies and huge dumps over the next 6 months. So strap yourself in for some pretty big moves, because if you're not, it's not going to be for the week of heart. I think there's going to be 20-30% moves potentially in a few days, if not weeks, for these particular coins. And that's because there's going to be news coming out each way. Guys, if you enjoyed today's video, then please remember to subscribe and, of course, smash that like button. And just a quick reminder as well to follow us over on LinkedIn, particularly my posts, because I'm doing that psychology stuff, which I think will help each and every one of you if you really want to improve at trading and investing. And, of course, follow us over on X as well. A lot of the charts that we have in these videos, we do post there, so you can see them in all of their glory, and then, of course, study them and see also what other people's comments are about them, whether they're good or bad. Thanks so much, guys. And we will see you in the next one. It's going to be an exciting time. Earnings season. Can't wait for it. Bye for now.